SoftBank did what some might have said was unthinkable before. It sold its entire stake in Nvidia. SoftBank announcing it cashed in all of its Nvidia chips for about $5.8 billion. Masayoshi Son, who runs SoftBank, will use his company and the proceeds to fund massive investments in OpenAI. So they're not getting out of AI. They're going a little heavier into OpenAI. Obviously, a lot of questions, a lot of angles here. So let's bring in Mackenzie Sigalos with more big sale, big news.
Yeah, it is, Brian. You've got SoftBank making one of the boldest shifts that we've seen in this AI cycle, exiting Nvidia to go all in on OpenAI. And you said it, the firm just sold its entire Nvidia stake. We're talking about more than 32 million shares worth nearly $6 billion. And it is part of this broader repositioning around the application layer of AI. And that includes participating in OpenAI's secondary share sale, which just closed last month. And, of course, SoftBank is leading that $40 billion primary round that's expected to wrap soon. And I will say this, to raise the cash for both of those investments, SoftBank not only exited its Nvidia stake, it also sold more than $9 billion worth of T-Mobile stock, and it tapped a margin loan on its ARM stake. So it is pulling every liquidity lever here to fuel its next chapter with OpenAI. And I will say, it is not a call against NVIDIA's future. They've explicitly said that this isn't about valuation. It is about where they see that next wave of value creation. And it's not in the infrastructure layer, but it's in the interface. So the platforms, agents, those tools that consumers and businesses are actually using. One other note, Brian, this is not the first time that SoftBank has exited out of its Nvidia stake. They also did that back in 2019. Had they not, it would be a stake worth $210 billion today. Nvidia surged 5,000% since 2019.
And even for Masayoshi Son, who I believe is the richest man in Japan, that is still a lot of money. Let's stay on that story because they're planning to really bet the house on OpenAI. But here's what's interesting. Their biggest competitor, Anthropic, likely to make a profit a long time before OpenAI. Why?
Well, the Wall Street Journal just got their hands on some financial documents from both OpenAI and Anthropic, and what they show is just how differently these two AI giants are approaching profitability. So the why is that Anthropic has always been focused on enterprise, and it's paying off. Roughly 85% of its revenue comes from business customers compared to OpenAI's 70-30 consumer-heavy split. And that consumer side, Brian, it includes products like ChatGPT, that new video tool called Sora, which is very popular for them, but also deeply unprofitable and a major driver of OpenAI's infrastructure costs, why they've committed more than $1.4 trillion to power that consumer-facing product. Now, I will say this, some of those numbers that the Wall Street Journal got, the docs, they expose the fact that OpenAI expects to lose $74 billion in 2028 alone, burning through 14 times more cash than Anthropic before it turns a profit in 2030. And that's a big concern here. Bernstein analysts, they did some back-of-the-envelope math based off of Microsoft's latest quarterly print. OpenAI burned $12 billion in Q3.
So I want to be clear what you just said vis-a-vis the Wall Street Journal. OpenAI plans to lose $70+ billion in 3 years. Not this year, not next year. 3 years from now, they still see losses greater than the market cap of the majority of American companies.
But CEO Sam Altman would say, in fact, he just said at the end of last week, that they are on track to bring in revenue on the scale of hundreds of billions of dollars by 2030. That was a sharp revision upward. So they're saying that, we're spending to make money.
Yeah, listen, a lot of companies make a lot of billions. They try to make profit on those billions, not lose money. But it's early. We'll see how it shakes out. And we'll see how patient investors are going to be. Mackenzie Sigalos, thank you.